Welcome to episode 66 of Let's Talk Bitcoin, a twice-weekly show about the ideas, people, and projects building the digital economy and the future of money. Visit us at letstalkbitcoin.com for our daily guest blog, all our past episodes, and of course, tipping addresses. My name is Adam B. Levine. Have you ever lost something carelessly, only to discover later it was wildly valuable? As the price of Bitcoin goes up, that initial carelessness is now fueling a hunt for treasure, and perhaps a darker side too. Andreas, Stephanie, and I talk lost, locked, or misplaced Bitcoins as buried treasure. Then, on Thursday the 5th of December, I found myself at the Plug and Play Tech Center moderating a panel discussion about Bitcoin. In contrast to our normal deep dive interviews, this one plays out like 5 mini interviews with Lightspeed Ventures' David Chen, Ripple Labs' Chris Larson, Perkins Coie partner Jay Cabot, Gift CEO Vinny Lingham, and BitAngel.co's David Johnston. And finally, where does value come from? Is it the money we use or the system that controls it? Ed Rex submits and performs his piece, Satoshi and the New Gold, to end today's episode. Enjoy the show.
With the recent increase in Bitcoin prices or the exchange rate, something very interesting has happened. Old hard drives containing long-forgotten wallets are suddenly becoming buried treasure. I've seen this phenomenon play out several times with people gleefully reporting that they have found an old wallet while searching one of their old computers. I was reading an article on Reddit where a student had discovered an old wallet from 2010 and said, I have lots of student loans, but it seems I have 917 Bitcoin in this wallet. And I'm looking at the price and I'm not sure what to think. Can someone confirm? Am I really rich?
Woo!
It's such a great story. And then at the same time, you've got
beer.
Yeah, exactly. Oh, too much beer. Suddenly you've got these completely opposite stories. And one of the most interesting ones was a person who had discarded a hard drive, then realizing that on that hard drive were 7,500 Bitcoins, or about $7.5 million, or about 5 million pounds. This was in England. They know which dump or which landfill the hard drive went to. And now there's people with metal detectors digging through the landfill. So here we go. New industry. Treasure hunters looking for digitally encoded Bitcoin wallets that have appreciated in value. Imagine 100 years from now, Bitcoin is $10 million in equivalent today's money. And someone's looking for a great haul from a rusty hard drive or USB stick that was lost in the bottom of the Atlantic, and they're sending submersibles like looking for the Titanic.
I think there are also people who are starting businesses basically to not only help people recover their wallets, but also to, make a profit in the process. They're seeing a need that's unfilled in the market, which is recovery of old Bitcoins that are suddenly valuable. These things are starting up, whether it's people going out with metal detectors to this landfill in the UK, wherever it is, or people who are kind of disk diving and scouring old hard drives, maybe that have been like written over in some sectors to see if they can find that wallet.dat file and recover it somehow. I've heard a lot of stories about this in my personal life. Somebody who I know once very early on sent 65 Bitcoins to like an old Electrum wallet that they had since deleted. And they were trying to recover the old Electrum wallet with no luck. So they contracted it out to another person who was more computer savvy and said that he could have half if he was able to recover it. And then actually, I have a story that kind of relates to this. I've actually talked about this on the show before, so this is going to be a nice follow-up. I want to say it was like within our first 10 or 20 shows that I revealed that I had an old laptop where I had gotten some Bitcoins back in like 2011, early 2012. At the time, they were like $5 or less. I had about 12 Bitcoins in there. I had encrypted the wallet because at the time, everybody was saying, well, you got to encrypt your wallet, choose a strong passphrase. So I did. I didn't write it down and I kind of forgot it. And I had a vague idea of what it was, but not really enough to piece it back together. And there were a couple of times once I realized that I wasn't able to unlock the wallet that I tried to break into it. And every time the Bitcoin price went up, when it hit 100, I tried. When it hit 260, I spent a whole day trying to crack into it, trying different typos and combinations of what I thought the passphrase was. Didn't work. Then suddenly Bitcoin went up to about 400 and I was like, I gotta get this wallet cracked. And then at the same time, I actually heard about somebody, one of these entrepreneurs who's starting a wallet recovery business. It was walletrecoveryservices.com. It's Dave Bitcoin, not his real name, I'm sure. He wrote a brute force program. If you have some idea, like a vague idea of what you think the passphrase is, it can try different variations on that until hopefully the wallet is decrypted. So I thought, all right, well, these 12 coins are gone to me. I've written them off as gone, so I might as well try it and send it to him. And I sent him my wallet.dat file. Although you don't have to, with him, he has a way to actually, you can send like partial information from the wallet without sending the whole wallet. So he couldn't like take the Bitcoins and run, supposedly. But I didn't do that. I just sent him the wallet.dat file. What the hell? I have a big microphone if he screwed me over, right? So I sent him the wallet.dat file and I sent him what I thought the passphrase was. And literally within a few hours, he was able to decrypt it and he sent me back 85% of the balance, which is what we had discussed before. So needless to say, I was really happy about that. Basically what it was, the passphrase was a sentence and I had the word and in there and I wasn't sure if it was and or an ampersand. And there were some capital letters that I had gotten wrong. I was really close, but when you're typing in a password, close doesn't count, as we all know. So yeah, I had a happy ending to my story, and maybe that can help some other people, because I'm sure there are people who are listening to our show who have the same issue, that they made a wallet and they encrypted it and now they can't remember the password. So if you have that situation, check out walletrecoveryservices.com. Maybe Dave can help you. I really hope people can recover their coins, whether it's a hard drive failure or in the trash or sending it to some weird address that maybe the private key got archived or something like that. I really hope that people can get them back. And maybe now there's an incentive to do so.
Well, yeah, Stephanie, the incentive is that they're worth so much now. So suddenly, whereas a couple of months ago, that 12 Bitcoins might not have been worth his time. Now, even 15% of that 12 Bitcoins is worth his time. I mean, again, it's also relative.
Well, that's the big lesson here. The first lesson is that these businesses have an expanding market. As the price goes up, the things that are marginally recoverable become recoverable and then wildly profitable. And so that expands the market all the time from wallets. Eventually, it will be worth doing for a wallet that only contains a few hundred millibits, because that price will be worth doing and spending the computing power to do. The other thing to of course, take from this is don't delete anything ever, because you never know how much value it might have in the future. You might never know how recoverable it might be in the future. And if you think all hope is lost today, well, back that hope up and wait for the price to rise.
I actually have a story that's kind of taking the other end of this, passwords thing. During the price spike up above $1,000, when we were near, I think it was $1,150 or so, I actually received a couple of emails because a couple of my different accounts had been compromised. I set up a local Bitcoins account, maybe, I don't know, it would have been 7 or 8 months ago. And there hasn't really been much of a local scene in Napa, so I didn't really pay that much attention to it. I almost did a deal, so I had maybe a Bitcoin and a half sitting in a wallet there from a time, obviously, when they were much less expensive, and I didn't have two-factor on. And so even though I had a really long password on this particular account, not having two-factor led to my account being compromised. They actually tried to scam somebody else by telling them that they had dropped money into a night deposit and that they'd get confirmation for it in the morning. And so to send Bitcoins to it now, trying to use my identity, and it wasn't under my Adam B. Levine name, but it was crazy. And it was crazy. And I only found out about it because my email address was getting CC'd on these emails from this the buyer who was saying, I'm not sure if this is right. This seems a little odd. And so I was like, don't do it. And so, we got it fixed. But yeah, no, it was crazy. So, that was.
So you didn't lose that Bitcoin that was in there?
No, I did. That account is gone. I had them shut it off. The 1.5 Bitcoin I had in there was gone. That's okay. Like I said, when they're not worth so much, you find yourself with just some little ones lying around in various places that you sometimes forget about because they were worth a lot less at the time. So I kind of chalked this one up to that one. But also my BTCE account was almost compromised. It looked like the password had been because there was somebody logging in from somewhere else. And again, I didn't have two-factor on, but I had a different 12-character password on. So those long passwords really aren't doing it for me anymore. Maybe, we're high profile enough that I'm being targeted. But more likely, I think it's just Bitcoin is valuable and, it's worth it now to go through and do this stuff.
Yeah, oh my gosh. Yeah, you can get paranoid. But I think you're right. It's just the incentive for theft increases as well as the incentive for recovering old wallets. And Bitcoin's become buried treasure, and looters and thieves love buried treasure just as much as everybody else does, right?
Speaking of which, I just got a message on Reddit from the Bitcoin Tip bot warning me that I had an excessive amount of Bitcoin in my tipping account. Well, of course, it wasn't excessive in the past, but now suddenly I had more than $500 equivalent in my about half a Bitcoin in my tipping account. A significant amount to be sticking around and tipping. So kudos to the Bitcoin Tip bot developer who came up with the idea of notifying the owners that they have excessive amounts so they can start draining those out because it doesn't have the security, as he admitted, to handle those kinds of amounts. There's no two-factor. It's just for tipping, right? So you only need a few dollars in there. But this is exactly what's going to be happening. I found that I had some leftover in localbitcoins.com, some sitting around my wallet. Turns out several $1,000s. I had some leftover money in bitcoinstarter.com accounts that I had done, again, worth several $1,000s now. Go trawling and see what you can dig up. There's buried treasure out there.
When you shop with Bitcoin on Gift, you can get gift cards from over 200 retailers. Think of the possibilities. Not only is your holiday shopping taken care of in a snap from your Android device or on the web, but now you have a way to purchase everyday items from stores like Target, CVS, Gap, and GameStop using your Bitcoins. That's not even the best part. When you shop with Bitcoin on Gift, you get 3% back. Ready to shop? Visit GYFT.com today.
Happy holidays from Let's Talk Bitcoin. If you like the work we're doing, we appreciate Bitcoin tips of all sizes at letstalkbitcoin.com. Just as importantly, share the show with your peers and review the show on iTunes. Don't be kind, be honest. LTV reaches nearly 10,000 listeners, but has less than 50 reviews anywhere I can find. I'd very much appreciate your help in remedying this situation. Thanks for listening. My name is Adam B. Levine. I do a twice-weekly show about the ideas, people, and projects building the new digital economy, as I like to call it. And the people up here really are some of those folks. David Johnston is with bitangels.co and has been working on some of the most exciting projects out there in the Bitcoin space right now. I think that as far as VC is concerned, you guys are working with some really small projects that have a lot of potential. And I think that it should be really interesting to hear what you have to say. So thank you for joining us today.
Absolutely. Thank you.
Vinny Lingham is the CEO of Gift. Has recently become one of the Let's Talk Bitcoin sponsors. This was scheduled before that happened, so nothing there. But again, he's been one of the earliest adopters of Bitcoin, and I think that it's been pretty successful for you guys. Yeah. So thank you. Jay Cabot is with Perkins Coie, probably doing the leading work as far as in the legal space, in the Bitcoin space right now. Just about every new startup I hear about is being represented by you guys. So once again, thank you very much for joining us.
Happy to be here.
Chris Larson is the CEO of Ripple Labs. We've been on a couple of panels together, and if Ripple is Bitcoin 2.0, then we're going to hear about it today. David Chen, Lightspeed Ventures, right? I apologize so much. Again, the VCs that are working in this space right now and that have been in for longer than 6 months really are hooked up with some of the most exciting projects that are out there. So again, I think this should be a really interesting conversation. I'd like to thank you all one more time for joining us.
Thank you.
So the first question goes to you, Vinny. Break it down for us. As a merchant in the space, why is Bitcoin something that's attractive to you?
Yeah, so we're in the gift card space, and one of the biggest problems with gift cards online and online digital mobile gift cards is card not present, right? So you have people using credit cards to make purchases of gift cards, and you, as a merchant, you release the code straight away because the bank says, cool, it's approved, the card is good. And then 3 months later, you get a chargeback. Sorry, that card wasn't good. I mean, we've lost up to $2,000 on a single customer where they used a fraudulent credit card multiple times. The bank kept approving it. And when the message came back, they said, well, we were notified before the transactions that it was fraudulent, so why didn't you block it? And, well, they couldn't care. So the banking system is actually quite prejudicial towards retailers. Think about it. As a retailer, when you ship anything, whether it's a gift card or it's physical goods to somebody, you're at risk. And with Bitcoin, it was just obvious, right? So we get the money, it's digital cash. We know when we're giving out the gift card that it's paid for and irreversible. So that was the biggest saving for us, is actually going and taking this 3% margin, and it's actually more. It's about 4% worth of costs out of the business, and now it makes it a lot more scalable and profitable to run an online gift card business. And then we built a loyalty program around that by giving back 3% to our customers in points to encourage more purchasing.
Based on your experience so far in the space, if you had the opportunity of doing all of your business in Bitcoin, would you?
You know, it's a good question. I think the market we serve is obviously the whole US, and the idea of gift is that you can gift from the East Coast to the West Coast. If we can get mainstream adoption of Bitcoin and credit card adoption going to zero, then yes. But while there are payment options out there that are profitable for us, even marginally, it's worth adding them for the convenience of our customers. So we accept Visa, MasterCard, Amex, Discover, PayPal, Bitcoin. So, you know, the more payment options we offer, I think the better for us as a company. Although we reward our customers with 3% back on Bitcoin purchases and 1% back on credit card purchases. So, you know, we try to encourage more Bitcoin usage.
Do you see that as being a trend that continues in the future for you?
I think for Bitcoin to be successful, you've got to give reasons for people to use Bitcoin. And when people ask me, well, why should I use Bitcoin over credit card? The simple answer is, well, because I'm going to give you 3% back versus 1 as a part of our rewards program. And the penny drops. They're like, wow, that's pretty impressive. So you can put all your expenditure through. Think about it. When you walk into a retail store and you're buying clothing, whatever it is, all the prices in that store is marked up 3% because you're getting points back on your credit card, right? And if you're paying cash, you're losing that 1% back, whatever it is. So cash customers are at a disadvantage to credit card customers. That's the sort of financial system we've built. And with Bitcoin being digital cash, the way we look at it is, well, let's incentivize people to give us a low-risk method of payment, and let's and eliminate the friction and cost with credit card and the risk for the retailers. So that's how we built our business.
Thank you very much. David Chen, I'd like to ask you, so when you're looking at new projects in the Bitcoin space, are there particular industries that you're looking at? It seemed like last year it was kind of all about exchanges, and it's a little bit less so this year, but what are the trends you're seeing?
Well, I think to be clear, we're still in the infrastructure building stage. So absolutely. I think you might have noticed that we were early investors in BTC China, the major exchange in China. So we're still pretty excited about the exchange space. But in terms of applications that we built on top of Bitcoin, I think an obvious one is remittance. We've seen a lot of pitches around there. I think the challenge with the remittance in particular is that the local demand in, say, India or the large remittance corridors, Mexico, India, local demand for Bitcoin isn't quite there yet. So you'll have trouble with liquidity. But we see a lot of promise with remittance. There are a lot of obviously e-commerce transactions. So anybody who's enabling payments, I think that'll be pretty interesting. We're also looking at the applications that are built on top of the core Bitcoin protocol. So things like Ripple, Mastercoin, colored coins. I think smart property, smart contracts. These are emerging areas, but once the core infrastructure is built out, a lot of these new financial instruments could be built on top of Bitcoin itself. So those are all very, very exciting.
Thank you, David.
Yeah.
Chris, can you kind of talk to us about Ripple for a second and the ways in which it addresses problems?
Sure. So the Ripple protocol is really three things. First and foremost, we designed it to be a distributed payments platform. Second, it does have a math-based currency, analogous to Bitcoin, currency without a counterparty. That's really what Bitcoin, that's what Ripple are. We look at that really as the enabler of a distributed payments platform. And then third, because Ripple is actually currency agnostic, Ripple is also a distributed currency exchange. So kind of our view on this is that virtual currency is really just the tip of the iceberg of what's going on here. The big innovation that's happened in the world is that the world has figured out how to confirm financial transactions without a central clearinghouse, which is actually the exact same thing as building a currency without a central bank. So we figured that out. We've solved the double spend problem. That was the thing that was preventing value from being exchanged like information already does on the internet, right? We've had an information internet for 20 years. We have not had an internet for value. So we believe that's the big thing that's happening. And what we've done with Ripple is say that that's what we should be building, an internet for value, not a virtual currency. Now, Bitcoin, I think, also can be an internet for value, right? Now it's a currency with a payment system for value put in Bitcoin only. At Ripple, turn it around, it's a currency agnostic value internet. Put anything you define as value, dollars, euro, yuan, Bitcoin, Ripple, airline miles, merchant loyalty points, gold, anything you define as value should be able to be in an internet of value. And then you don't really ever have to adopt a virtual currency. We think the world is not going to adopt a single virtual currency. It can't. There's too many different needs for different types of currency. Some people will want inflationary currency. Some people want deflationary ones. The analogy would be if we forced everybody to adopt a new language to use the internet, we wouldn't have the world we have today. Everybody's not going to speak Esperanto. And it's the same thing with value. Put anything of value you want in it. So that's how what we see as the real benefit. Ripple does that. We also have tried to clear transactions quicker. We use a different confirmation method than Bitcoin. Bitcoin uses mining. Mining is brilliant, but it has some flaws as a payment system. It's slow, 8-minute confirmations. Obviously, off blockchain is an option, but then you're in a central authority again. So Ripple's about 5 to 10 seconds. So those are really the two things that we've tried to solve. And then we use our virtual currency really as just the universal joint as the most efficient path to go from one thing of value, let's say dollar, to maybe put on a gift card, for example, to something else of value, a yen or a yuan or airline miles, for example. So that's kind of how we see the world.
Thank you, Chris. Jay, so, the challenges surrounding virtual currencies at this point really seem like they're more legal and regulatory than they are technical. The technical problems all have solutions, but the regulatory side has a little bit more finesse involved with it. What are the problems that you're running into? What are the problems that you're trying to help your customers with, clients with?
Yeah, it's always the lawyers that get in the way of the good innovation, good technology. But I was very heartened to see a lot of the pitches focused on what those companies are doing to ensure their investors and their customers that they are compliant with law. I think that, especially in the early days of Bitcoin, because the Bitcoin community grew up largely in a, kind of, whether you want to call it anarchist or libertarian, but there was certainly that bent to it. And now that it's becoming more mainstream, the fact of the matter is this is a world of laws and governments, and we have to find a way to have this very innovative technology and very innovative system, integrate with the established, not that innovative, kind of annoying systems for financial compliance. But as I think the more successful companies in Bitcoin are realizing now, these are not insurmountable problems. They're problems that demand a little bit of innovation and a little bit of work. But we saw a couple of different models that companies talked about today. One is seeking the licenses that you need individually, partnering with companies that may have those licenses and getting into some kind of contractual relationship with them. So there's a lot of action right now in kind of innovating the compliance side of this, and I think that's been pretty interesting to watch.
On the Bitcoin side of the business that you do you think that in 5 years you'll be doing more business or less business? Will this normalize is the question.
Yeah, I think that my contribution, which is very mundane compared to the things that people are doing in this room, but in terms of helping people navigate the regulatory compliance and law enforcement landscapes, that will decrease in 5 years. I think that we're having a lot of action in my space now, simply because this isn't just a technology that interacts with people or with products. Finance is a very highly regulated industry, and the speed with which Bitcoin can be transferred, the irreversibility of Bitcoin transactions, and just the massive growth in adoption has caused a lot of folks in regulation and law enforcement and in lawmaking, especially very, very, very recently, to take notice and to say, hey, wait a second, we've got to figure this out. So I think, to answer your question simply, 5 years from now, I doubt that anyone in Bitcoin is going to be inviting me to speak at a Bitcoin conference, which will be too bad for me. But for now, there's a lot of action in the regulatory space, and my personal belief, and one which I've shared with some people in the room at other events I've spoken at, is that the companies that are poised to succeed, not just in Bitcoin, but in other decentralized virtual currencies and in payments generally, in the long run, are companies who have taken on the compliance challenge head on and found a way to solve it in a way that's above board and that's comfortable even to kind of stodgy old institutions like state banking regulators and banks. You saw a couple of people talk about how difficult it is to get banked as a Bitcoin company. Bitcoin companies with solid compliance programs can get banked. It's not as easy as running a grocery store, but it is certainly out there and doable. And I think that's companies that have invested in the compliance side, they've got that. They're pretty far ahead.
So I want to follow up with you one more time. So I agree with you. I think that it is possible, but there are other examples out there of companies that really are compliant or well-funded, BitInstant being the most prominent of them, that have apparently been shut down with no recourse for more than 4 months, and the only thing holding them up has been that they can't get a bank account.
So, I mean, I'm not in a great position to talk about any one particular company, but I'll say that getting the meetings and making the contacts with people at the financial institutions to really get banked is challenging. And I think that it was just a couple days ago that we saw B of A come out with some policy on Bitcoin businesses. We're going to see more of that. My guess would be that if Plug and Play does an event on Bitcoin a year from now, there will be a number of prominent banks that have established Bitcoin banking programs. If I were a man of unlimited means, I would buy a bank and bank Bitcoin companies. I think there's a tremendous amount of growth in that area. There are a lot of very smart, very law-abiding, very innovative people who are working in virtual currency and cannot get a banking relationship, and that is a huge problem. But there are also a lot of those people that have developed really good compliance programs, and I'm sure there are people in this room working on technology tools that will allow those compliance programs to far exceed the capacity of compliance programs at more traditional money transmitters. There's just so much information out there between the ability to harvest information from users, between the information in the blockchain. People are going to develop those tools and continue to develop compliance programs and analytical tools that will allow banks and others to get very comfortable with the fact that Bitcoin businesses are not, they don't pose a greater risk for money laundering or terrorist finance or anything.
So it's just a new thing.
I think it's new. They're still building those kinds of things. And, as someone said earlier today, banking is not known for great innovation.
Right.
And I think this is just an example of technologists coming together to create an extremely innovative product that is moving very quickly and banks being just slow to keep up.
Thank you, Jay. David, so, every Bitcoin conference that I go to, I see you there, and I see you always, sneaking off into the corner with the interesting projects that have absolutely no funding whatsoever and talking to them about creating altcoins. So, can you tell me about, what strategies you're using when you're investing into this space? I mean, are there particular characteristics or types of projects that you're attracted to at this point?
So, what I'm primarily interested in is people that are doing something more than Airbnb for Bitcoin or eBay for Bitcoin. I've been approached by a high number of those companies, which is great early on. You can do those things now with Bitcoin. But I would just echo what David said about building infrastructure is really my interest at this point. So you need to be building a company that has a competitive advantage beyond a year from now when Airbnb themselves starts accepting Bitcoin, and then your competitive advantage disappears. And so most of the interest from the BitAngels so far has been in these infrastructure level investments. And so David brought up Mastercoin. I led the due diligence for that particular investment. This is a protocol built on top of Bitcoin that does distributed exchange, distributed commerce. That is the single biggest investment that the group has made, about $5 million in that particular project. And I really believe it because it was a very fundamental thing that everybody wanted, was a decentralized, no counterparty risk way to do commerce, the way to do exchange, the way to do financial transactions. And so people that are building in that infrastructure, those are the deals that I want to look at. People building those fundamental protocols, that's what really gets me excited. In fact, as you know, I recently published an entire white paper on the subject of decentralized applications and how we can use this new model to build these new types of companies that aren't traditional, but instead built on open source. They have their own token and they have their own protocol. I think that could be one of the single most disruptive things that comes out of Bitcoin, is this entirely new monetization and financial model.
So the Bitcoin as we know it now is not the Bitcoin that we'll know in 2 years from now.
Exactly. I mean, we've seen some really, really important developments come out from the core Bitcoin developers. recently, Gavin, the chief scientist for the Bitcoin Foundation, posted a great update about this debate in the Bitcoin community, which has been going on for a year or so, about should Bitcoin just be about Bitcoin transactions, or should we be able to attach additional metadata information into the blockchain to store other kinds of information and to do all these types of different features. And so what he said was the core devs have now given a clear way that people can add metadata to the blockchain records. And that opens up a huge number of applications. And so I expect I'll spend most of 2014 exploring how to invest in the companies that are building out those core applications.
What do you think of the fact that Bitcoin as a protocol kind of continues to expand over time and that it's not really a static thing? And, like when I asked you that question, I actually was talking about, like Bitcoin will have things like Mastercoin built on top of it, but also Bitcoin itself is in flux. I mean, how is it to work with something like that?
Well, it's definitely still evolving. You've got very smart developers that are working to build the core infrastructure. And it seems like so far, they've really focused on the core features. So Bitcoin, for those that don't know, can theoretically enable a huge number of different type of features. But most of those have been turned off because they're more difficult and they're more complex. Scripts is the usual example, right? You can do scripts in Bitcoin, but that's a feature that's been turned off in the reference client because it brings a lot of complexity. There's a lot of edge cases. We don't really know what the risks would be. And so what I've seen more and more is they're focusing on the scalability of the main transactions. I mean, there are big questions still left about the block size, about other technical issues. And as this becomes a $10 billion, $100 billion ecosystem, the core team seems to be really focusing on making sure they nail basically scaling the existing system. Right. And that's really where I realized there's really a need for these additional protocols on top because you need a different token that is monetizing different features. And so you can have a different core group of people focusing on that particular feature set without sort of risking the underlying infrastructure. And so that's been a big realization for me the last 6-12 months. And that's why I've spent so much time on it.
Thank you, David. We're going to return to, I'm sorry, Vinny, I almost skipped you. I have a question for you. Hang on a sec. So one of the interesting parts about Bitcoin and these blockchain technologies is that you actually have a lot of information about how these transactions process. You are dealing with a lot of Bitcoin transactions, and I know we've talked about how you don't share those publicly, but I'm wondering, internally, is that an advantage of doing Bitcoin, or is it do you gain from that?
Yeah, I mean, so we're very smart about how we do things, and we try to be respectful of people's privacy. So we don't dig in too deep into the information. We also use BitPay, which operates as a proxy service. So we don't actually know the wallets of the consumers, where the coins are coming from, because they pay BitPay. BitPay does the exchanging and then pays us on our side in fiat or some Bitcoins. So yeah, we don't really have too much visibility into that. That's what you're asking.
That was what I was asking. Do you intend to use BitPay as your payment processor kind of just forever, or is it at some point it makes sense to just integrate natively into the app?
Look, I think for many use cases out there, it probably doesn't make sense to not use a payment processor. So there's a lot of work that goes behind accepting payments and checking for a lot of things. Double spending, etc. Especially when the transactions get bigger. I think it's also just easier for us to focus on our core business. We don't want to set up nodes. We don't do any of that stuff either. So I think if your core business is not actually being in the infrastructure space, use the infrastructure providers. That's what they're there for. I mean, BitPay powers 15,000 merchants out there. At no level of scale does it make sense for us financially to go and invest in that. I mean, the fees they charge us are so minuscule. So it doesn't make sense as a business to do that.
Thank you, Vinny. David, so you have an investment with Lightspeed into BTC China. It seems like a lot of the action that's been happening in the Bitcoin markets has been driven by extreme demand in China. Do you have any insight into that market?
Sure. So we recently invested along with Lightspeed China partners in BTC China. This investment happened a bit prior to the recent run-up. So a bit of luck there. Yeah. But I think our interest in Bitcoin is a global phenomenon, right? So there are a lot of nations like Argentina like Cyprus and areas of Europe where there's really high inflation, capital controls, where transactions are it might actually make more sense to do those in Bitcoin than your local currency. So you kind of see this local demand happening in a lot of places. And I think if you just look at a country like China, there's just a massive number of people in China. And we kind of saw that as a very interesting opportunity for something like Bitcoin. Pair that with an outstanding entrepreneur, Bobby Lee, who is just a seasoned technology leader. He led technology at Walmart, Stanford degrees, engineering manager at Yahoo. So has a track record of leading technology teams. So kind of pair that team together with a large market opportunity. It seemed like a good bet. But I think overall the statement here is really about the global phenomenon that is Bitcoin. And a lot of the innovation that's happening, it's happening in the US, but also looking outside the borders here. So if you look at just the exchange space, you've got Mt. Gox in Japan. In Slovenia, you've got Bitstamp, BTC China leading in China. So those are the top 3 exchanges, and none of them are based in the United States. And a lot of that may be due to regulatory concerns. It's hard for companies to get started with the 50 states and needing to comply with regulatory bodies in all 50 states. Gathering your money transmitter licenses as an exchange is a very lengthy and extensive process. So in the meantime, we're looking outside the U.S. But also, obviously, we're U.S.-based investors, so we would love to invest in more companies here as well.
So the U.S. is often identified as a hostile regulatory environment for things like virtual currencies because people didn't really know how they were going to react. But I don't get that same feeling about China. And that's kind of an interesting thing if you think about it, because the yuan has capital controls on it that make it very difficult to convert into non-yuan denominated currencies. I mean, is that any sort of concern? Do you have any sort of concern that the party might end in China?
I think it's dangerous for us to speculate about how the Chinese government wants to rule its country. There was an announcement actually made in the last 24 hours in China around kind of encouraging, or actually basically telling banks not to deal with Bitcoin. So that statement's out there. It's unclear, where China's going to go with its citizens, whether or not they're going to outlaw Bitcoin outright. It seems like they haven't done that yet, and they've been signaling that may not be the direction they're going. But anything can change with China.
I would agree with that. The only reason why I'm pressing you on this is because there actually there's a parallel here. QQ Coin, which was a social media currency, achieved a very high rate of penetration into China, and after a certain amount of penetration, they did ban it. So again, there might not be an answer here. I just figured I'd...
Yeah, time will tell. Hard to speculate at this point.
Thank you. Chris, can you talk to us about why virtual currencies are something that are legitimately important? You're an entrepreneur who is building an entirely different virtual currency network that's currency agnostic. So, what are the reasons why this was a problem you wanted to solve?
Well, I think it's just clear that financial services just have not changed in the last 20 years of the internet. It's sort of, this whole revolution has just bypassed the banking industry, the finance industry. So I think really what Bitcoin kind of ushered in 2009, and now I think is just an unstoppable reality, is that you can exchange value like you can information at that same point. And that's a huge game changer, because before this time, all payment systems, all financial systems are country by country. They're actually hugely limited in big parts of the world. China being an example, where you have huge internet penetration, but you have a cash society that doesn't have a lot of payment options. So that's not lining up. You need to have the citizens of the world be able to see the information, Airbnb or whatever it is, and execute on it through payments. And the world is missing that. So that's why this is such a big deal. And to date, you've seen fintech companies, and my last 2 companies, Elon, Prosper, they were US centric. And you're sort of trapped in the US. So much fintech is like that. I think that's why venture capital has not been that interested in fintech to date, really, when you compare to other things. And now that's all over. It is global. And in fact, Bitcoin, Ripple, these things Ripple is also, number one. China's our number 1 region. So these things are actually more important in the developing world and in places like China, which are just, so wealthy now and such huge e-commerce markets. And that's a big game changer. So startups now can really go global in fintech. You can start doing things with dramatically lower costs, dramatically higher numbers of customers that you can serve. These are great things for the world. And I think regulators, are starting to see that. That's why the Senate hearings were so positive a couple weeks ago. They're starting to see these not as some fringe thing. It's not. But as a really monumental shift where now finance gets flattened, just like information's been flattened.
As a retailer, we get people around the world trying to buy gift cards. For example, online retailers, there's a whole bunch of them that support delivery in, I think, 150 countries. And when they put their credit card in, and I'm going to pick on an African country like South Africa or Nigeria, one of those. I'm from South Africa. So when you use a credit card in those markets, it's happened to me when I'm there. No, like the merchant cancels the order. The email comes back, sorry, order's canceled. We don't trust the credit card, or we don't, the shipping address is, whatever it is. And so, and you can't blame them, right? So if you're a retailer, you're an online merchant, how do you trust the credit card's good for a foreign bank issuing it, and then you have to ship the goods overseas? It's even worse than the US. And so when we use Bitcoin, now we're plotting our international expansion in 2014, and we've got dozens of online retailers that ship to hundreds of countries around the world. And now they're saying, okay, well, if you guys can take the payment and deal with that and issue a gift card and people use gift cards to pay online, it's fine. And they're currently doing that. So we're seeing a lot of international traffic, people signing up on our website, buying gift cards, paying with Bitcoin and having goods shipped to them that they previously did just not have access to. For them to go and buy on an online retailer was just not possible because the credit card system. So to Chris's point, I think Bitcoin is now opening up new avenues for e-commerce companies to start looking at audiences outside the US and not have to worry about fraud risk.
Thank you, Vinny. Chris, I have one last follow-up. So one of the primary differences between Ripple and Bitcoin is that Ripple is an actual company and Bitcoin is sort of powered by a foundation, but mostly it's just out there and there isn't really anybody backing it. Do you think that that's a detriment or a benefit for you?
So just to be clear, so there's two things. There's Ripple, the protocol, which is open source, basically a public good. Anybody can use it without paying. Ripple Labs, which is the company I'm CEO of, and there's 35 of us now in San Francisco, and we're growing rapidly. So in a sense, we're sort of like a Red Hat to Linux in a way. So anybody can take the code. There's the Ripple protocol. Again, they don't pay us fees. Our business model is that we have created a math-based currency called XRP or Ripple, and we're distributing lots of that to incent people to get onto the Ripple protocol, market makers, Wall Street companies, for example, gateways throughout the world, because those are the ways you bring other things of value that do have counterparties, dollars, euro, yuan, airline miles, for example. So we don't have to charge fees through the protocol. We can just hold on to a portion of the XRP, and if the protocol succeeds, it's a deflationary currency, XRP, just like Bitcoin. You would expect that the currency would succeed, therefore our business model would succeed. So there's a separation of the two, but what we like about this model is that we can hire a ton of great engineering talent to really work on the core network, and then let other companies build applications for consumers on top of that, like you do on Bitcoin, but we can really concentrate. We have a lot of our engineers are some of the original Bitcoin folks, Stefan Thomas, David Schwartz, Jed McCabe, who invented the consensus method. And we think that's constructive for the network itself.
Thank you. Jay, can you quickly, we're almost out of time here, can you quickly go over some best practices that you think, like the top 3 most important things that all companies must do to operate legally in the space?
Wow. I guess if I could, I would put myself out of a job. So I'm hesitant to do that. And I'm also hesitant to say what I've heard lots of lawyers say, which is, oh, just call your lawyer. Although I'm happy to take your calls. I would say that I think just at a thematic level, people, especially as a very educated audience about some of these issues, and there's a lot of nuance in the regulatory environment. But one thing I would say is, especially to people in rooms like this that are, they're committed to operating above board businesses. Your relationships in your cryptocurrency business or whatever that business may be, is it an exchange? Is it providing some kind of consumer-facing interface? Is it payment processing for merchants? You have to be transparent with all the relationships that you have. And if you feel good about those relationships, I think as a rule of thumb, you're doing pretty well. If you, for instance, are a Bitcoin business and your bank doesn't know that you're a Bitcoin business, I would say red flag. Yes, you may not have broken the law. You may have. If you signed a form to open your bank account and it says everything's true and correct under 18 U.S.C. 1001, and I promise I haven't made any false statements, and if they asked you were an MSB, you check no, that's possibly a crime. But more broadly, if you go down to your corner bank, you open up a small business checking account, and you're moving a huge volume of dollars through that, I think that's going to set off some red flags. The same way with your customers. If you're a Bitcoin business, are you making the right disclosures? Are you really kind of out there? Obviously, you've got your secret sauce that you're going to keep in the back cupboard. But broadly speaking, we kind of know what the issues are. Are you a money transmitter? Are you engaged in some other money service business? And those are issues that kind of need to be acknowledged and solved, rather than, I think, 6 or 8 months ago, you saw a lot of people trying to kind of go around the regulations. At this point, I think it's pretty clear that companies that are going to succeed in cryptocurrency, in virtual currency, in online payments, whatever that evolves to be, they're not trying to go around the regulations. They're acknowledging what they are and finding a way, whether it's through lobbying, which there are lots of people in the Bitcoin industry that are involved in very, very persuasive lobbying efforts to make sure that regulators don't regulate the United States out of the Bitcoin market. The fact that the 3 largest Bitcoin exchanges are not in the United States says something about what the regulatory climate is. Maybe that's not what it will always be, but I think that's certainly an issue. But as a general rule, companies who are especially companies trying to raise outside capital, if you're not being honest with yourself and with your business partners about what your business is, about what disclosures you're making, you don't feel good about someone doing diligence, you've got some issues.
Thank you, Jay. And we're going to end with you, David. David, so you released a white paper about distributed applications. We have 3 minutes and 13 seconds. Can you do it? Can you give us an overview of what's coming next in Bitcoin? Or in cryptocurrency?
Sure. I'm happy to talk on that. So what I'm seeing as the future is, just like with the internet, we have different protocol layers. The same thing is going to evolve in Bitcoin. So we have, at the bottom of the internet, TCP/IP, right? That is the basic messaging mechanism. On top of that, we have HTTP. On top of that, people have built browsers. On top of browsers, people have built applications. And so there's a lot of gain and benefit you get from the network effect. And having a layer that already exists that's massive in size, like Bitcoin, that provides a lot of security against a 51% or double spend attack, gives you a huge starting advantage if you build a protocol on top of that. And so what we see with Mastercoin is the first wave of these type of applications. There's others out there that have been mentioned. And this is really exciting because now with Mastercoin, it gives me a layer that has different features that Bitcoin doesn't have. So one example is the distributed exchange that lets me trade any digital asset for any digital asset directly on the blockchain without having to have a counterparty. I'm actually making that offer to the blockchain. Somebody's seeing that offer and they're matching that offer, and the blockchain does that matching. There's no counterparty. So that's interesting. The other main feature that really interests me is the user-based currencies. Forbes recently covered this in an article about Mastercoin. Basically, Mastercoin allows you to create your own digital tokens for not necessarily currency or even payment systems, but any application that you want to record the ownership in tokens, you can now issue those through the Mastercoin protocol. It's recorded in the blockchain transaction, so you have a permanent record of that. And now when you want to offer those tokens to customers or to developers or to people doing the funding, now you have a mechanism to do that. So that's a pretty incredible stack that's developing with Bitcoin at the bottom, something like Mastercoin or these other protocols in the middle, and then you have people building more user applications, sort of customer-facing applications on this third level. And so that's what I describe in my paper is, what do we call these entities? This really hasn't existed before. They're not companies. They don't have employees. They don't have revenue. They don't have profit. All the monetization is built into the mechanism of the token, similar to what we have with Bitcoin. And so I've termed those decentralized applications, distributed apps for short. You can check out distributedapps.co if you want to read the white papers. But I really do think that model of building a company is something we haven't seen before and is incredibly disruptive, incredibly interesting because it leverages all these different technologies.
David, thank you very much.
Sure.
And that wraps up our panel. I'd like to thank all the panelists, David, Chris, Jay, Vinny, David. Thank you very much for joining us. This was really enlightening.
EasyDNS is the Swiss Army knife for your domain names, helping meet their customers' individual needs since 1998. EasyDNS has been an outspoken critic of SOPA and CISPA. EasyDNS was an early supporter of Bitcoin, and now they are proud to sponsor this show. Do business with a company that shares your values. Get a 13% discount when you pay with Bitcoin. Go to bitcoin.easydns.com and be sure to use discount code LTB.
Hi, this is Jason King for Bitcoin 100, and you're listening to Let's Talk Bitcoin. But you know, Bitcoin is not really a talker. It's a doer, just like the best nonprofits and charity organizations. And at Bitcoin100.org, all we do is find hardworking nonprofits and charities and give them $1,000 in Bitcoin. That's all we do. So donate to Bitcoin 100 and let Bitcoin, nonprofits, and charities do what they do best.
Satoshi and the New Gold, a children's story about Bitcoin. Written and read by Ed Rex. There was once a village at the base of a large mountain. For years, the village elders had been in charge of handing out gold to the villagers. The villagers used this gold to trade food, clothes, and everything else they needed. One day, the whole village was woken up by a loud hammering sound coming from the square. They all rushed to see what it was and found that a large notice had been nailed to the doors of the village hall. "People of the village," it said, "I have discovered a new metal. It may not look precious, but I promise you it's more valuable than gold. It is found in the rocks of the mountain and needs to be mined. Those who want some come to the highest lake every morning at dawn and join the miners. Satoshi." No one knew who Satoshi was, but they all muttered excitedly when they read this. What was this new gold? Could it really be more valuable than the old gold they all used? One of the elders stooped down and picked something up from where it was lying under the notice. He held it above the crowd, and they saw that it was a large, rough piece of metal. It certainly didn't look more valuable than gold. Was this it? Was this what Satoshi had discovered? Disappointed, the crowd dispersed, and everyone went about their daily business. But there were one or two people who wondered if what Satoshi had written might be true, and they decided to find out. So they left the village and made their way to the highest lake on the mountain. As they rounded the corner and the lake came into view, they saw hundreds of pickaxes and shovels strewn across the rocky landscape with no sign of who had put them there. Intrigued, they picked up some tools and started to dig. When they returned to the village that evening, they passed some of the other villagers, who beckoned to them and asked what they had found. The miners showed them a single, tiny bit of this new metal, which was all they had returned with. The villagers laughed at them and told them they were wasting their time, but even so, the miners agreed to split it equally between themselves and decided to go back the next day and try again. The following morning, when they met in the square to return to the mountain, one of the villagers who had laughed at them the previous night was there waiting for them. "Do you mind if I come with you?" the villager asked. They knew they'd be able to mine more with more people, so they agreed to let this new volunteer come along. And so a larger group this time traipsed out of the village to search for the new gold. In the days that followed, more and more people were waiting in the square every morning to join their group. As they left the village, the curtains of the houses they passed would twitch as the other villagers watched them go and wondered if they too should be spending their days mining up on the mountain. The more people who joined the group, the more everyone else thought that perhaps it might not be such a bad idea. Soon, some villagers who couldn't go up the mountain decided they wanted some of the new gold they kept seeing people returning with. So they started swapping their old gold for the new gold the miners brought back with them. The people who ran the market stalls couldn't get time off to go up and join the miners, but they too wanted some of the new gold. So they started accepting it instead of the old gold at their stalls. Soon, villagers could use their new gold to buy food, pay for carriages, and even have an ale at the local inn. Even though more people were talking about the new gold, most of the villagers still didn't see what all the fuss was about. They could buy everything they needed with their old gold. Why would they want to replace it? But all that was about to change. One morning, the town crier, who roamed the streets every day proclaiming the day's news, turned his attention to the new gold. "Do you have any new gold yet?" he shouted, going from house to house and ringing his bell. "Soon everyone will be trying to get some, so get it while you can." When the villagers heard this, they all rushed out into the streets. If everyone else wanted the new gold, they didn't want to miss out. They crowded around the stalls in the market that had been set up just for people to trade their old gold for new gold. So many people wanted new gold that by the end of the day you had to pay 1,000 pieces of old gold for just one piece of new gold. As more people became interested in the new gold, rumors about it began to spread. Someone claimed they had heard from Satoshi himself that the amount of new gold in the mountain was limited and it would one day run out. And, sure enough, the miners had to dig deeper and deeper and use bigger and bigger tools to keep finding more of it. Knowing that it would run out only made people want it more. Even though more and more of the market stalls let people pay with the new gold, for a while the villagers stopped wanting to use it to buy things. Even a small piece would have bought them enough food to last for a month, but they realized that if they stored it away instead, they'd soon be able to buy twice as much with it, since it was getting so much more valuable so quickly. After a while, though, when the initial excitement of the new gold wore off, its value stopped rising. People started using it to pay at the market again, and the old gold they used to use lay forgotten at home. Lots of the villagers regularly traveled to the other villages that lay around the base of the mountain. They used to have to swap their old gold at the border for the different money the other villages used, and the elders of each village would make them pay for this and would keep the profits for themselves. But now, all the villages used the new gold, since they all had access to the mountain and sent miners up to the lake, so no one needed to swap their money and pay the tax to the elders anymore. That wasn't the only reason the elders weren't happy that everyone was using the new gold. They had always controlled how much of the old gold was given out to the villagers, which gave them power over the whole village. But the mountain, lying outside the village, didn't belong to them, so they had no control over the new gold that was mined there. One day, the elders held a secret meeting and decided to ban the new gold. They called the entire village to the square to make their announcement. "The old gold has real value," they said. "We use it to make our jewelry. But the new gold is worthless. We don't use it for anything. We want it only because everyone else wants it. So from now on, the new gold is banned. We'll go back to using the old gold." The assembled villagers murmured amongst themselves. They didn't agree. They liked the new gold because it took control away from the elders, and it meant they could travel to the neighboring villages without paying a tax. But the elders had a point. No one had ever actually used the new gold for anything. It wasn't shaped into necklaces or bracelets. Were the elders right? Was it worthless? Suddenly, a voice spoke up from the crowd. "You're wrong," it said, and everyone craned their necks to see who was speaking. A space cleared around an old man in a cloak who had a hood pulled down over his face. "The new gold isn't worthless," said the old man. "It has value precisely because people want it. It takes power away from you and gives it to us. And as long as we want it more than we want the old gold, you have no choice but to let us use it." At these words, the villagers all nodded their heads and started shouting that they wanted to keep using the new gold. The elders looked at each other and realized the old man was right. They had no choice. "Then, so be it," they said. "We'll use the new gold." The villagers cheered and celebrated all night and into the next day. Over time, the new gold completely replaced the old gold. The different villages traded with each other more because they all used the new gold, and power shifted from the elders to the villagers because the villagers were finally in charge of their gold. No one noticed the old man in the cloak slip away from the celebrations. He walked to the village gates, looked back at the villagers, smiled, and disappeared into the night. And no one ever heard from Satoshi again.
Thanks for listening to episode 66 of Let's Talk Bitcoin. Buried Treasure, Seekers, and Thieves was produced and edited by Adam B. Levine and featured Stephanie Murphy, Andreas M. Antonopoulos, and Adam B. Levine. A Look into Bitcoin panel was sponsored by Plug and Play Tech Center and featured Chris Larson, David Chen, David Johnson, Jay Cabot, and Vinny Lingham. Satoshi and the New Gold was produced and edited by Adam B. Levine, written and performed by Ed Rex. Music was provided by Jared Rubens. Questions or comments? Email Adam at letstalkbitcoin.com. Have a good one.